Hello, hello. We should be live. Can you guys see and hear me? Perfect, perfect. So, last message out. I think people are joining step by step. So if there are problems, try to reload. Otherwise, you should hear me clear. And you should be able to send your questions already. So I'll know them. When will be any content in the lead program? So think about the questions. I think we will go also through one of two questions from the Discord, or at least one question I've just seen a couple of minutes before the stream here started. And otherwise, we can go through some examples. And then, again, big sorry for deleting the questions chat. Felt like a boomer, 40 years old, trying to use software, but I'm not used to Discord. Hope that's understandable. Cannot see a lot of questions until now, because I don't know how many people are joined in here. Andrea just texted me that his internet, I think, just left. But please tell me if you can see and hear me. Just with a yes. So after reloading, it's working again. Hope you brought some questions for live Q&A because it's gonna be the last one, and then we're gonna start into Christmas and then into the new year. And usually from first, second week of January, there are sometimes big capital moves because all the big funds reevaluate, or a lot of them are now in the stress of the final execution of this year. What have they done this year? What's the performance this year? And as most of the funds are measured year by year, beginning January, they will restart to rethink their investments. So that's also the reason we're not starting the streams now, although there has been a big move in, or kind of some volatility now in the second half or close before Christmas. But most of the time it is not the case. But now there's still pretty high volatility for that. So you can see in here, then try to implement your questions in the Q&A. I'll just need to cancel my call. There was another call stepping in. I can listen to you. Perfect. How can I archive the question? So we can see in here, I think Andrea's gone. He texted me that his internet left him. Bad infrastructure. So let's go through a couple of questions. There are not a lot, but maybe there are going to be some more when we go through the answers. So the first question was, when will there be any content in the Elite program? What do you mean with content? There is content. We recorded some videos. The motivation of me, first, some people complained about the videos or the video calls not being too long. And I tried to condense the information that we want to deliver and that you need the shortest period of time, because the rest of it, it's just a waste of time on my side and on your side. If you want more content, just give it a rewatch. It's very likely that in the first time you don't understood everything. There is the content in the Elite course about the sections that you have questioned the most yet. And if you still have a lot of questions about that, please send this to Danielle, customer support, or the WhatsApp, so we have the feedback, and then I will try to re-record some sections tomorrow or extend with examples and so on. So there will be content, and of course, starting mid of January, there will be a lot of live sessions like this where we analyze the markets in the morning. We can implement fundamental analysis that we get from our fundamental analyst, but we cannot explain a lot of that because it's a whole simple topic. I think in the Discord chat today, there was like a question about ranking. Let me just reopen it. So, where was the question? There. So let me share my screen. Yes, so there was a question. So there was a question. Let me just change my screen in OBS. Perfect. My monitor went off. Now it's back. But it's looking weird. So No, it's not that one. It is. What is it? I don't know why I cannot share my monitor at the moment. We tested before and it was running. Now the monitor is just looking weird. But there was a question of ranking fundamental analysis. And of course, we get a fundamental briefing of our fundamental analyst. We have one in the company. I'm here working in Frankfurt. Of course, there's also Lars in the TTT team. But it's a very difficult topic and it's also very difficult to master. So even if you want to learn the fundamentals and want to analyze the exact same way somebody else is doing, there's not a process by at first you look at inflation and then you look at the money printer, how much money is printed, then you look at the the core inflation or energy data, and then you check for the PMI, because all the situations are individual and they're different depending on the market phase you're currently in. For example, if you are in high inflation and interest rates rising, of course, interest rate is important. But in some cases, for example, in the past year, it has been very important how is the unemployment rate, because if you have a rising inflation and you have rising interest rates and the unemployment rate does not go up, the inflation will not come down, because then you will just have inflation, but the labor market's still very good. And then the companies start to pay higher salaries. Higher salaries mean there's a lot of inflation and you have like an inflation cycle. But it was just the past year. Most likely the story in the next year is going to be a different one. So it's going to be very difficult to rank or just give a ABC algorithm process for analyzing fundamentally. It is a whole topic. Of course, there's a lot of knowledge about that, but there are many fundamental sources. Either you have, I mean, we have our fundamental analysts, but there's also a lot of content out there on X. There are a lot of people that publish just theses and topics. They do like analysis, they share their analysis, and then you just need to think about, does it seem to be logic? Can I create something like this by myself? And then you just need to exercise and exercise and exercise. So let me open up the questions again. So will there be any content in the Elite? Yes, the content there is for an hour. There will be some more videos added in the next week, most likely, or next 2 weeks. And then, of course, the live session starting mid-January. No. Lead program section is dedicated to, seems like Andrea is back in the chat. The recordings here will be added as well. So I just finished the basic program and I realized the strategy or the concept is quite mechanic. It will be a bit more detailed furthermore. I mean, the strategy entry, for example, or is it something that we have to develop by ourselves? The strategy can be, or you can try to put it in a mechanic way, but still, if you, for example, analyze the context, it's going to be very difficult to put in an algorithm. Of course, we also thought about, we worked together with some programmers to optimize it, but to analyze the context, to think about the fundamentals, then to put the volume in context, then to do an inter-market analysis. For example, when you handle or you trade the Nasdaq and you look out, what is the S&P 500 doing? Is there a spread between Europe and the US? Those are like individual topics that an discretionary trader always implements. That's going to be very difficult for an algorithm. Of course, you can build algorithms or mechanic algorithms around strategy. For example, if you create business zones and you just go into a step or open a position one tick before the business zone, the stop loss is one tick on the other side of the business zone and take profit. This is the next business zone that is possible and that's doable. And some of those strategies are also profitable like this. You have a lot of trades, you have a lot of execution, most of the time a low hit rate. But the context or the concepts we teach are discretionary and they're not that mechanic. So there are mechanic parts in it, but the whole strategy as it is not that mechanic. But what the question was, or is it something that I have to develop myself to really understand the handles and handle a strategy in a good way? Let me check if the other screen is Oh, let me try to add. I took some examples from a student that we have that is very disciplined. So, for example, I will just take his example because he shared it for free. Let me just add. Let me just add. Uh, hmm. So you should. Why is sharing the screen not working? In OBS I can see it. Can you see it? You should see it as well. Yes. So this is just an example. It's in German, but it's going to be the same in English. What's the market you're trading? How do you feel like? When's the criteria that you don't trade because you feel sick? What is the analysis you do for the day? And then you just go through the whole day and you just document all the things you're doing. And if you don't do this for a period of time for a strategy, and it is a lot of work, you will never build trust in the strategy. And at some point you will add in your own stuff. But for example, this is kind of most of the stuff that we teach him that he's studying since years now, and it is working for him. So that's the thing you need to do, because otherwise you won't trust the strategy in times where it's going to be difficult, or you will see something else and that maybe perform better in a period of time, and then you're going to hop to the other thing. So you need to create like a sunk cost fallacy. So you invest some time. But I think, did that answer your question? Otherwise, reframe the question and ask it again. Can you send a study plan, especially with comments on what to know before coming to live sessions? So the best thing is before the live session is always to do your own analysis. So to, like a document that I just showed, to document your own analysis, to try to implement and use the things that you learned and understood now, and write it down. Don't just have it in your head, write it down, and then compare it to the things that we do together, the way we analyze. And then review the things you analyzed and review the things we teach, and or the topics or the thesis that we communicated, and review them as well. And that's a process then of learning, of implementing and getting the stuff into your brain. Hi, Jonathan. Can we go over the GC analysis I posted? Yes, there was a GC, I remember. And I just thought, why should I create a long text as an answer when we just can go through? Just open it, download it. So you should be able to see the screen. Yes. So it is a screenshot. First of all, it is a good screenshot and a good question because there is a screenshot inside and you can clearly see the things, what it is about. So it looks like perfect. My screen just went off. Now it's back. Looks like MetaTrader, right? So first question, what is the market doing? For that, another screenshot with like a big picture, or one screenshot where you have like different windows. I, for most of the times, prefer that you have like an overview on the bottom left or bottom right, that you see like where's the big picture, because this way now I just see the day yesterday and that there kind of maybe was a balance day. I don't know because I don't see the profile. So more context of this would be good. Of course, we can now go to trading view and search for the gold market and try to create the context for ourselves. But that way the analysis and the feedback is not as good, constructive as with the own examples. So we are, if we look at the big picture, in the gold markets, uptrend, we broke the uptrend since here, we're now in the downtrend. We had like a B shape here. Then we had another impulse to the upside, no continuation. Now we're below the zone. So we still have a kind of bearish bias. This was the last constant fair price on a bigger picture. Let's go to a lower time frame. Yes, still downwards. Still downwards. So, and then yesterday, 18th of December, 19th. So this was on Wednesday. We're like a P shape. Where is the closing price of this day? First important question. Closing prices are important. We told you a couple of times in course. You should see the closing price in here. I cannot see it. Of course, I can now check for it in TradingView again. But again, this is not the way the feedback is most efficient. But in general, if we have a profile like this, we would intend uptrend or a weakening downtrend. We have the value area here. It's kind of overlapping with this one. We don't know where it closes, but if the open would have been inside here, we would expect to range in between here. So to the upside, to the downside, to the upside, to the downside. We had a move to the downside, then we built a tail. Most likely, where are the last letters? In this case, there's the close and there's the open. So we had like a balance below the profile, but we have a weakening downwards trend or an upwards trend in this case. And we opened below. We have a weak low. We have a ledge here. We have not really a tail high, but the high is very stronger than the low. If we would open here, we would again trade balance to the upside, to the downside, to the upside, to the downside, because this is a D profile, D-shaped profile with a close, but we had the open above. Still have a weak low. If we have the open above, we at first have the first sign of strength. So if we have the first sign of strength, we don't just short. If we want to short, we check for either 30 minutes, day trading examples, 15 to 30 minutes, spending in the previous day value area, so in this range, or we check the price to test the POC, the previous day, go back to the value area high, and then trade through the whole value area again to the other side. In this case, most likely we'll take out this price level again because there was no strong buyer, but there was still a lot of interest or too much interest to trade at an extreme. In this case, we don't have it. We just have an open drive, like we open and then we just go inside of the previous day value area. So the likelihood of us accepting this area now is there. So we either can create a business zone or we have low volume areas where we can check for long trades. Let me check if I can draw him in here as well. Don't think so. So when we have a business zone, what the fuck? So it is not better. So if we have a business zone, or this in general is the area of interest, value area low, could also be a low volume area, we can check for long trades here. And then our first goal is this area, another goal is this area, but again, in this case, it would also make sense to look back if we are an uptrend or a downtrend, but as long as we are above this point, we expect to accept the old area. Downtrend. What's today? Maybe we should continue the questions that are written down. So it isn't a downtrend. That's correct because we just checked on TradingView as further confirmation. But in this case, it would also be good to send an example and explanation if you want good feedback about how do you define this downtrend, because there can also be a mistake. What's today intention? As long as I explained, as long as the open is above and there's an open drive, we continue long. If it would stay inside this and inside the value area here, then at the POC, and then here when we test back the high, we can check for shorts down. Previous non-trend day, balance day, exactly. Previous D-shaped profile, yes. Close inside value area within the balance, yes. So everything was a sign that we either, because we have the close, we have a balance profile, we have a weak low, the highest chance was that we just do balance or we continue downwards if we are in a downwards trend. And strong high, weak low, today's open outside value area, trade ideas. So the best trade idea in this case would be a short, but the open did not get the short. Market participants have interest to buy, so we should continue for longs in this case, as long as we are above this value area. Below that, we can start to think about shorts. Hope that's answered. So then, next question. I have a problem in understanding in drawing boxes. When we finish drawing boxes, when will the first higher close occur? Also, sometimes I don't know if I am drawing support and resistance correctly. So, calculate, then just send examples. In this case, the best thing is draw boxes, send feedback, and then I can answer those. But in this case, it's just like an open question. I can try to go through examples again with you, but I don't know if this is gonna help you a lot. So if we just take the gold chart, does not matter which time frame, and we now draw boxes. So we are in a downtrend. Let's say we have an impulse here. Where do we draw our first box? We have one higher close, another higher close. So this is our lowest close. So this is our starting point of the box. First I need to change to TradingView again. So impulse, we have an impulse. Where do we have the first two higher closes? One higher close, another higher close. So we take the lowest close and this one here as our first area of interest. Then where do we have the first two lower closes again? So we have one close on this level here. Then we have an inside bar where I expect there's not a gap. So this is a higher close. And then here we have the first lower close, the second lower close. So from the close of this candle, in this example, we have the first confirmation of the first box, but the high of the box is not the close. It is the highest close of this range. And that one's over there. And now we have our box. So this is our first box. And we have a B shape. And then we break out to the upside. And then when we are below here, so when this candle closes here, we are back inside this range. And as soon as we are back inside this range, we check for shorts. So we could check for a pullback, then short to the other side of the value area. And in this case, if we are in downtrend, we can continue. And then we can check for adding to the shorts here. So we have a B setup with a breakout to the upside and a break back into the range. And that's the trade setup. Hope that's understandable. And that way you draw boxes. And at some point, of course, it can be confusing of now, if I have this box and I'm back inside this box, do I extend this box to this box? It makes no sense in this case because we want to check for the setups that we are learning. Of course, if this happens a couple of times and the markets starts to build a range here, then at some point, if the market's continuing here and going down, then we like extend the box because then we have a range balance. And if you still want to check for a valid setup to the downside, you can use this box, but in this case, it makes no sense because this is our perfect B setup. It didn't all work out in this case, but we also did get no entry, just an aggressive one. But that's how you draw boxes. But all of that is also explained in the course. I mean, we can go through some more examples. And to the upside, or if you have a range market, just take this. Low liquidity Asia, most likely. Yeah. So when we want to draw ranges, we can just start anywhere, but it makes sense to start somewhere where there was an impulse. So where there was a shift of perceived value of the underlying asset. So we have lower close, lower, lower, lower. First higher close, but there are not two higher closes because this one's low again. And then we have a higher close, lower, 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 lower. And here we have one higher close, two higher closes. So this is like the first box that we have. And then we can trade this box, but it's super aggressive because the box is super small. In this case, we check for two lower closes. And in this case, we then have one higher close, another higher close. Then we have a lower close because this close is lower than this close. And we have another lower close. So we have our box. Our box is this way. And then we can try to trade this. In this case, we're still in a downtrend. So if we break out, break back in, then we can continue to the downside. But there is no real interest for trending on this day. And that way we can extend the box as soon as we have two lower closes again. So when we have two lower closes, which is, in this case, we have two lower closes compared to that high, can extend this box. And then if we break out the box, for example, if we're inside the box, we can check for longs on the downside and shorts on the upside. If we expect a balancing or a ranging market, in this case, we expect it to continue to the downside. We can use this as resistance. So we can either check for shorts here on the retest, would be the preferred options. Otherwise, if we spend, in this case, it's a 1 hour charge, maybe 1, 2, or 3 hours. Inside the box, we can check for longs and check for counter trades. And that way you use PBDs as setups and as support resistance. I mean, the mentorship program Elite still says coming soon because the live sessions will start in mid of January, and that's going to be the biggest value. When we combine the things we see, the markets we analyze, that's going to be the biggest value. That's why I think there's coming soon. But from all the operational side, we had the deal with World Class Edge or with Andrea and Fabio, and that we don't want to, or I don't want to spend a lot of time with building infrastructure. I just want to deliver the value, deliver the knowledge, and otherwise continue to build up the company I'm currently working for, because I think the vision and the mission is nice, and I don't like all the operational stuff. When it comes to opening and accepting the price in value area for 30 minutes using the DAX, as example, you mean 9 a.m. Central European time, so our first trade is at 9:30. Yes, most of the times, yes. When there is very high volume and high interest because a lot of things are going on politically, you can also use the first trade can be also at 8:30. But otherwise, 9:30 Central European time is correct. As market profile and volume, are market profile and volume profile different? Yes, they are very different. Completely different underlying logic and calculation. And for that, you should rewatch the course. Market profile is about the time a market spent on a level, and volume profile is how many contracts are traded on that level. But I think a lot of people will be bored when I extend explanation about this in here. Just rewatch the course, and there it is explained. How does the approach to trading change if we swing trade? Logic is the same. So let's just take any market, for example, Bitcoin. There's some movement in there. And if we now want to check for a swing trading idea, because we like Bitcoin, we have the thesis that the seasonality maybe is good, or soon there's Christmas, positive seasonality. Maybe some people will gift each other Bitcoin, or a lot of people will buy Bitcoin because they will talk about it. And families sit together, they don't know what to talk about, so maybe they talk about Bitcoin. It is a valid thesis, although it's kind of jokey, but it is. For example, my thesis I built around Christmas and the New Year's Eve is the likelihood of retail stepping in rather than stepping out is higher because people talk about it. Most of retail currently is in profit, so the likelihood of retail talking about this topic is even more. So they do like marketing, retail below me. Retail tells retail to buy Bitcoin because they made a lot of money with it in the past year because the likelihood is high that a lot of retail people sitting on family dinners made a lot of money, and people always want to talk about things they made money and not they lost money. So the likelihood of retail buying and maybe the retail volume rising is high. So in my expectation, the institutional money in this case will exit. This was my thesis 1 week ago and still is my thesis. As you can also see, I placed one sell limit above here. It was not filled. I will delete it now because my sell limit was not filled. But if we want to create a swing idea. So let's go back to the swing idea, but this is maybe the topic. Bitcoin will rise because a lot of people will buy it. There also was a question how far do I zoom back? Makes no sense to zoom far this back if I just want to have a trade idea maybe over the couple next 2, 3, 4 weeks or even 3, 4 months. This is the last bull run, so it makes sense to check for the last bull run. If there is no interest in me of waiting 1 to 3 months until I can buy Bitcoin back, it also makes no sense to scale this far back. But this is always individual to the trade idea. In my trade idea, if this is the topic or the thesis that I have, I just take like the last impulse to the upside. In this case, this one is totally enough. And then to the left, I have a volume profile, and then I will check for low volume areas where I can check or look for a trade. And where are those low volume areas? It is from here to here. So this is my area to get a long trade. And where could be my first exit? It can be here, but I would see this still as a high volume area. The first really low volume area is over here, and I could exit there. And this is also a logical point to exit there because the impulse started over there. If we go to a lower time frame, this is also where like the aggression of the big market player started. And that way I can create a swing idea, but the logic is the same. I can now say, okay, this is my area of interest, go to a lower time frame, check, okay, there's an impulse. You can see also I have candles on with the size, but you can also add on a volume profile or other volume. There is still very high volume for the extreme. So it is the extreme, but there's still high volume, but I can now choose different ways to trade. First, I have like a box set up over here. So this is my box. If I have a B set up in this case, and we are now back in, I can think about, so this is my swing zone. And I can just buy if I have a pullback here on the swing zone, go long, put the stop loss below, valid idea. If I want to increase it, I can now check for a P setup. So I have a B setup here. This can be or get a reversal setup. So I can check for longs on a pullback down here, put the stop loss below here. I won't prefer it because there's still very, very high volume. So this is kind of a weak low for me. And then just take the trade idea to the other side. If I expect to Bitcoin rise even more, then just take a swing trade. I don't have reference points from the past, so I can just take a fixed risk to reward or have no take profit at all and check when my trade idea is not valid anymore. And that way, for example, I have a B setup. I can also go to an even lower time frame and check for a P setup to trade. So where do I have my first two lower closes in this case? So I have my first two lower closes over here because first lower close, second lower close go to the right. And then this is the breakout, this is the pullback, and then trade it to the long side. For now, there's no setup, but I mean, I can now go to the 1 minute time frame and check for a P long setup that my idea is to hold for a couple of weeks or months. Then you're going to have a lot of entries because the likelihood that your M1 setups are going to be stopped out very often is very high. You can do this, but then you need to recalculate and reduce the risk because then you will have like a hit rate maybe of 10% or lower, but your risk reward is going to be very high. But then you also need to catch very setup. In this case, maybe just go down to the 1 hour, 30 minute or 15-minute chart as the lowest time frame to get a valid long idea for Bitcoin. And the same is for the other topic. If you think or your idea is Bitcoin's now going to fall, even if you don't have an idea at all, then and you just want to trade the technicals, go to chart. We are clearly in uptrend. Where's the low volume area? Already marked them in. So there's one low volume area. There's another. So we can scale in here. So this is a long idea. If we want to go long lower, can also take this area. I mean, there are a lot of areas of interest where we can go long. You just mark them. And as simple as that. I think, again, a lot of you guys think that's very complicated, or you want fixed rules as take 50 days to look back always. We don't give you copycat strategies. You need to do this independent and you need to exercise it. Otherwise, you will not trust the strategy, but that's the way we analyze. That's the way we trade. That's the way Patrick trades. That's the way we share our trades with Patrick. So you mentioned in one of the video that the hit rate is quite low, but the risk reward ratio is pretty big. Could you give us a rough idea about the hit rate? So if you trade the day trading zones, check. If you trade the day trading zones or swing trading zones on weekly basis, business zones, without setup, so without the footprint chart. So by the way, from the example I just did, you can even go to a lower time frame and then take the footprint chart and the order book for the entry. But then again, the chain is too long for a swing trade. In the of course, it would be the optimal to have this idea and now monitor the Bitcoin over the next 3 days with the footprint and with the order book and scale down your risk and then always scale in at the best setups. But it's always about how much better will it be and how much stress is for you and how much time investment in front of the screen is it for you. But if you're a team, of course, you can do it. But as an individual, it's going to be too difficult. So back to the question. Hit rate, yes, hit rate is between 30 and 40% if you trade the business zones daily. It's going to be 20 to 30%, sometimes maybe 35. If you trade the weekly without setups, if you trade them with setups, they're going to be higher, maybe 10 to 20% higher, but it depends very strong on the market phase and also how good you are and what's the reason or logic and the reasoning behind. But that's roughly the case. But always, most of the times, around about 30%. Buying market data and trading view, will this be sufficient for daily trading or still necessary to have zero chart? For hardcore day trading, trading view is not sufficient because you don't have a footprint, you don't have an order book, and you don't have real volume data. It is tick volume. I think I will record a video where I'll explain this because there have been a lot of questions about it. So tick volume is just the price ticks, one tick, and this is then like one volume. And if you have real volume, the price can tick, but it ticked because of 5 contracts. If you look at the big picture, the similarity between the volumes is kind of high, but for day trading, the difference is too big. If you buy trading view data, it's just that you don't have a delay for the markets. Do you take the entries on the same time frame of which you create boxes, or do you create boxes and then look for entries on low time frames? I just showed you in the example you can go to lower time frames to check for setups because you can also combine. Let's go to this example. We have a B setup on a 30-minute time frame. And if we now want to enter the setup and we say, okay, we have an interest to buy down here. We can go to a low frame. We can just set a limit here. For example, in this case, on a low time frame, we could combine this limit buy with this zone down here. We say, okay, this is the last accepted price. Furthermore, here's a low volume area. And we take the setup and we expect the impulse start. Or we just want to trade to the other side of the value area. Furthermore, there's kind of a weak high here. There's some more weak highs over there. Let's just say this is our next area of interest. Could be a logic case in here. And in this case, we combined it with a lower time frame. We can also go now to a 1-minute time frame. Check. We most likely will establish a downward structure here again. and then wait for a structure shift on M1 and look for a setup here, or wait until a P setup on a lower time frame is formed. For example, if you want to trade the break in, so on the 30-minute chart, you have like this box. And if you want to, the general idea is either you want to go long on this low volume zone down here, or on the break back into this range or this balance, you can go to the 1-minute time frame and then check for a P setup. So in this case, we spend some time in the area or in the range that we defined to the boxes on a higher time frame. We don't see the trading view. Perfect. So quick repetition. This is a 30-minute time frame. We had a B setup. You should now see the screen. Can you see this? Can you see the trading view screen? Please give some feedback. I don't think you can see it. This is a box defined in the 30-minute time frame. You can combine it with a lower time frame. In this case, because this now is a box on a 15-minute time frame or a 5-minute time frame, we can use it as stop loss. Furthermore, if we check for this impulse, where is the last low volume area, there's also a low volume area in this, so we can combine the different boxes. But if this now is our idea for an interest to buy on the low side, either we could have checked for a P setup, like here on a 1-minute chart, and just trade the breakout or trade the retest, and then speculate on the impulse to the other side, but it's going to be a very aggressive one. But as you can see, also the risk to reward is getting higher, or in this case now we established a down structure on the M1 again, and we can wait for an upward structure to establish here again and check for a P setup and then trade it to the other side. So yes, you can combine the different time frames, and this was or is kind of a real life example how the different approaches how you can combine it. So would be if you demonstrate entry directional conviction using footprint chart and order book in lower time frame once price came to the business zone series 600 or edges, or do you have practical demonstrations? Yes, we have them. I don't focus on day trading that much, but we can of course deliver that, and we will deliver that in the live sessions, but this is mainly about the Q&A and not. This already is a lot of live examples for a Q&A, but all of this is going to start mid of January. But yes, we'll do that, and we will also do it with the footprint chart and the order book. And we will take Serge also into this because he's the master in this. I've seen that the gold future markets you're using TradingView GC continuous contract, and of course TTT explains whether or not we should use the adjustment contract changes. Yes, so the different platforms roll contracts on different times. I also should record a video, an explanation about this. So you can roll a contract when the contract's ended. So when there is delivery of the futures contract, or you can roll or create a chart based on one contract flipping to the next when there's more traded volume in one day than the previous one. In Sierra chart, you can define this. In TradingView, the basic setting is that the contract is rolled when the previous one is expired. So there's the delivery date. But you can change this. So when you just go to the chart, let me open the TradingView chart again. Can you see the screen? Not that the same problem occurs again. So, but if you just have GC, in this case, it rolls automatically. But when you just go to the open the contracts, you can just open the different contracts, and then you will see what futures there are. So when there is the delivery date, and when you go for the volume and you make long-term analysis, you should go for the volume. Then you can take or just choose the contract that you want to choose. So where in which contract the highest volume is, and just choose that one. And now the contract's not rolling, but as you can also see, the liquidity in this contract is way lower. And that's why we don't want to trade that contract. And I, in TradingView, just use the automatically rolling one when the previous one is finished. So you can see if you choose the different contracts, this one is very likely to expire soon, and then the liquidity is lowering. But as you can see, also the liquidity here was pretty high. But that way you can dodge like the roll, automatic roll function of contracts in TradingView. I don't know how it is with the different software, but that you need to check with your software. Jonathan, where would you buy, enter if there is an open drive pattern? If there are no pullbacks, like I just explained, in low volume areas or other areas of interest. So if there's a previous if there is a previous value area and we accept this one, we can check for longs in there. And otherwise, just in the extensive trend, pullbacks in low volume areas. I just explained that at the beginning of the Q&A, so you can maybe give it a rewatch. What are the two alternatives to Sierra chart when you recommend try, which are more user-friendly and still functional enough? I don't know. I don't have experience with it. I have experience with Sierra chart and TradingView, and that's it. I know a lot of people use Atas, so maybe Serge can answer questions about that, but just send them into the Discord and I will ask him to answer them. There is a lot of software. I think in Italy there is a Volumetrica. In the US there are 5,000 software more. There is multi-charts. There are so many, and I don't know all of them. So I think I now need to move and continue working on other stuff, but I think this is also all the important questions. There are no on my screen anymore, so then most likely you will get some updates over the upcoming next 2 weeks and more live sessions starting in January. Bye.